Wondering if now is the right time to buy or sell? In this fast-changing market, staying informed is key. Today, we'll break down the latest trends. I'll help you understand whether prices are rising, falling, or stabilizing, and what that means for you. Let's dive into the data and uncover the opportunities in the Arizona housing markets together. Q4 is upon us, and during this part of the year, resale supply is increasing as it usually does between August and November. The extra supply is currently outpacing demand, meaning buyers have some favorable negotiating power right now. We might see this trend continue for a bit, but by November, if supply dips due to seasonality, we could see the market tighten again. The Cromford Market Index is hovering around 100. This is a balanced market. We've been in this stage of balanced market for about 3 months now. On pricing, in September, we saw more listings pop into the market without the buyers to claim them. The average price per square foot is slightly lower than it was a year ago, but don't worry, the median sales price is actually up by 2.3% from last year. So things are stable. List to price ratio was 97.71. This is reasonable for the month as September tends to kick off the serious sellers entering the market. Pricing gains have decreased as sellers' intent and expectations curve when they themselves need to purchase the next home. In September, homes were taking an average of 71 days to receive an acceptable offer. Under contract listings went up by more than 9%, and they're nearly 12% higher than they were at this time last year. Now, I won't sugarcoat it. Sales volume in September were pretty low, but remember, the housing market doesn't shift overnight. We should start seeing better closing numbers in October as long as the numbers of under contract homes keep rising. Interest rates. The Federal Reserve didn't hold back and knocked down 50 basis points off their benchmark interest rate. Confused about what this means for mortgage rates? Well, you're not alone. This news sparked a lot of interest in what this action might do to mortgage rates. Surprise, surprise, they actually went up slightly. This is because mortgage rates are not based on federal funds rate, but tend to be controlled by the 10-year Treasury bond. When I checked today, it showed rates at 7.11%. Mortgage rates had already fallen in anticipation of the Federal Reserve cut around October, and Powell's comments regarding the economy were less than optimistic. Every election year, people ask if the presidential election has a significant effect on the housing market. The short answer is no. Elections have minimal impact on the housing market. Weaker sales in 2000 and 2008 correlated with recessions, not necessarily who was running or caused by the election year. Life events like family formation, marriages, births, job changes, aging parents, you get the point, have a greater impact on the housing market than politics. There are always a few buyers who loudly claim they're waiting to purchase a home until they find out the results of the election. If you are leaving the country, depending on which candidate wins, I'd love to list your home. But I know you're probably not going to do that. And in fact, if we look at the volume of sales in the 5 months leading up to a presidential election, we find the following data. Politics have much less impact than politicians would have you believe. Now, if they do deliver on promises to infuse the market with down payment assistance programs and cut off tax breaks for homeowners, then yes, those will have consequences, but I don't think they truly understand economics and will inevitably do the opposite of what they're intending for our affordability problems. It may be hard to believe, but recessions have historically sparked housing market turnarounds. with home values stabilizing and mortgage rates declining in every recession since 1970. Except for 2008, but we all know that that was a weird one. Arizona's private sector earnings rose in June and July, outpacing inflation, and home price growth improving affordability. Although mortgage applications remained stagnant in August, this could be seasonal, but the real estate market tends to be slower than the stock market. With new listings up 11% since August, current buyers face much less competition and a more relaxed buying environment. However, many future buyers may face the challenge of being able to sell their existing home first in order to qualify for the next one. For sellers, as 2024 winds down, September and October mark the last strong month for home sales. Well-priced homes in good condition should see contracts within 33 days. Listings in late October may face holiday delays, adding 1 to 2 weeks to the process. While mortgage rates boost demand under the $2 million price point, luxury homes often sold in cash are less affected. Despite recession fears, luxury listings are strong, especially in Paradise Valley. However, rising unemployment and election uncertainty could slow luxury sales through the fourth quarter, with optimism expected to return in early 2025. For sellers, as 2024 winds down, September and October mark the last strong month for home sales. Well-priced homes in good condition should see contracts within 33 days. Listings in late October may face. So that's your quick market update. Whether you're buying or selling, understanding these market trends is crucial. Thanks for tuning in. And if you want to chat about your options, reach out today to book a call, connect with me on social media, or dive into my other videos. I'll be back next month with the real estate market update.